Hi everyone, I'm Ben Gonzalez and this is TDI. Today we're going to be talking about a situation that I guess you most likely don't want to find yourself in, and that's when you're in an accident or some other reason that your car is determined to be totaled. We're going to talk about what that means and what your options are. And joining us today is John Mooney from our property and casualty area. John, I think we should start by defining what totaled means, because I guess it's sort of shorthand, right?
Yeah, first of all, thanks for having me today.
Sure.
and talk about the topic of about total losses on your cars. And yeah, it's typically the definition of a totaled vehicle is when the cost to repair your vehicle is more than what the car is worth. So for easy math purposes, your car is worth $10,000. If the estimate comes back at $11,000 or $12,000, then clearly the insurance company is not going to pay more than what your car is worth. So at that point, they'll determine your car is a total loss and start the process of handling your insurance payment that way.
Now, how do they determine that it is $12,000 or more than the value of your car? Do they have software or formulas they use there?
Yeah, they have a main software. So there's estimatic software that the insurance companies use. It may be an estimator that's employed by the insurance company, but they also rely on the body shops as well to write an estimate. So they will take pictures of your car, talk about what parts need to be replaced or repaired, and they'll line item the estimate. And as a consumer, you should ask for a copy of your estimate from the insurance company. Mm-hmm. And then at that point, they compare it to what the insurance company thinks the value of your vehicle is worth. And they use a couple different sources. Different companies use different databases to determine what the value of the vehicle is.
But for the repair costs, do they all use that same kind of estimator, or does it vary from company to company?
It varies from company to company. So they'll look at what the labor is in the market area. They'll look at the cost for the parts, if they have to repair the part or replace the part. So they use different types of software.
Pretty much everything we do always says it varies by the company.
Correct, yes.
Well, we've had even folks here in the office have talked about how they've had to argue about what the car is worth versus what the insurance company says it is. They think it shouldn't be totaled because it's maybe a specific model, or they've done something to the car that increases the value.
Yeah, the first thing that you have to look at is how is the claim being handled. If it's because it works two different ways, whether it's a liability claim when you're not at fault, or if it's your own insurance company and you're handling it under comprehensive or collision. So when it's your own policy, you need to read your policy. They may have an appraisal clause in your policy where you can ask for hire an appraiser to go out and determine what the value of your vehicle is, and the company will do the same thing. And if they can't agree, then they'll bring in an umpire as a third appraiser to determine the value of the vehicle. You can also file a complaint with your insurance company, ask to speak to a supervisor. But more importantly, make sure you know what the model is of your vehicle. That XLR or XR, all the different things can make a huge difference. You're sometimes talking thousands of dollars. So you need to make sure the insurance company has all that information. You can also go out and get what they call comps or comparables. Comps is short for the comparables, is go look and see what's out there in the market. Contact a dealership and say, hey, what do you think my vehicle is worth, or what are vehicles selling out in the marketplace for? And you can give that documentation to your insurance company.
All right. And you talked about hiring an appraiser. That'd be on your dime, though, right?
Correct, yeah.
So you can do some of that legwork yourself, though, by looking at ads and car dealerships and seeing prices.
Yeah, there's various different agencies that are out there on the internet that will provide a service for you where you can do that. You can also look to see what they're selling for, and that kind of gives what they're selling for kind of gives you the market value of what your car is worth.
So that's somebody fighting to say, my car shouldn't be totaled because it was worth more, and I think you should fix it and get it done. And then on the other hand, you have people that say, oh, thank goodness it's totaled. I don't have to drive this wreck. I want to start over. Are they going to pay you to replace the car if you have the right, depending on your insurance?
Yeah, it depends on the insurance. Again, it goes back to whether it's your insurance or the liability of the at-fault driver. If it's your insurance, again, you have to go back and read your policy. Does your policy pay actual cash value, or does your policy pay for a replacement vehicle? So you would have to look to see what your policy says. If it's a liability claim, then they're going to be paying you, more than likely, they're going to be paying you what your vehicle is worth, because that's what their policyholder is negligent for.
And when you say what your vehicle is worth, you're talking about actual cash value,
Correct.
Which is what the vehicle is valued at today, not to replace it with a like model, right?
Yeah, so it's going to look at what your vehicle is worth. It's pretty much instantaneous, like right before the accident happened, this is what your vehicle was worth.
With wear and tear and
correct.
age and everything
Yep.
else in there.
They'll factor all of that in there, is that the mileage on the vehicle, the year, make, and model of the vehicle, what kind of condition was it in, was it upkept, is there tears in the seats? There's various things that the insurance company is going to look for to factor in on the value.
So depending on the age of the car and how it was before the accident, the payment that you get for your insurance claim may not be enough to put you back on the road.
Yeah, the first thing you're going to look at is, do you have a loan? You'll hear the term lien holder. So is your vehicle paid off? So if there's not, easy math purposes, if you have a $5,000 pending on your loan, your car's worth $10,000, they'll pay the lien holder that $5,000 first, and then cut you a check for $5,000. Right. But if your vehicle doesn't have a loan, then obviously you would get the full $10,000.
And if you have an older car, there's even components within that car like airbags and seatbelts that may push you quickly over that edge of what the car's worth.
Yeah, it on an older car, depends on the value. Some cars might only be worth $4,000 or $5,000. When the estimate comes in, it might be what you call minor damage, and your car can still run. But by definition, it is a total loss.
And, $4,000 is a lot of money to get you back on the road. But if you want to keep that damaged car and try to fix it, even though it costs more than the value, the car means something to you, or you just want to try to fix it, how do you get... I know the insurance company takes possession of the car when they total it out. Is that correct?
Yeah, so you do have an option of what you call owner retain it. So most of the time on a claim, the insurance company will take possession of the car and cut you a check for the full amount of the vehicle, for the value of the vehicle. Mm-hmm. You can owner retain it and tell your insurance company, hey, I want to keep this vehicle. At that point...
this is my baby. I need to keep it.
Yes, and that happens quite a bit. And it could be, what they're going to do is they're going to deduct salvage value. Okay. So going back to the $10,000 example, if the insurance company thinks they can get $3,000 at an auction for that vehicle, they're going to deduct that $3,000 from the offer and cut you a check for $7,000, assuming you don't have a lien.
That's the money that they could have gotten for the parts. Correct. And the metal and everything.
Yeah, because if you don't own or retain it, then the insurance company takes possession of it, and then more than likely they will sell it at the auction or at a salvage yard, and therefore that's money they would have recouped. In that instance, for the example, would have been the $3,000. So then they're going to, if you own or retain it, they're going to deduct that $3,000, but you also then at that point need to contact the DMV, and you can check their information on their website or contact them, because the DMV has titling requirements after a vehicle's been totaled if you want to drive that vehicle back on the road. So it'd be good to do some research before you make that decision, what it would take to get the vehicle back out on the road. And
it's not so much that I would fix it myself. It's also that you'd have to get it re-inspected and
Correct.
Get it retitled and so on.
The DMV has requirements to get it titled and properly be back out on the road.
Okay. I think that's most of the stuff we've covered about being totaled. You mentioned title. Is there anything else we should know about?
Yeah, just one thing to remember is to keep your title. If your vehicle is paid off, I would keep that title in a safe spot. I know a lot of folks have a lock box that's fireproof in their home that they keep valuable possessions, whether it's passports, birth certificates, marriage licenses, things along those lines. Because you don't want to keep it in your glove box, because if your vehicle is stolen, insurance companies will settle your claim without the vehicle being recovered. And it's called a stolen and unrecovered theft. And if you don't have a copy of your title...
It can be more difficult.
Yeah, it might take a little longer to get your claim settled. So it's good to keep your title in a safe place. I know some people keep them at the bank, but there have been stories where the bank is destroyed in big floods and tornadoes and things like that. So if you keep it in your home, it might be in a safe spot. That might be the best place.
I guess fire is also a concern as well, correct? Because of if the car is burned, the title's inside.
Correct. Yeah, you don't want to keep it in your inside your car for that reason, because if your car burns, then the title would be. So it's best to keep it in a safe place.
And you can also get into a situation, you mentioned the lien holder, if your car is worth less than what you owe on the loan, right? That would require gap insurance or something.
Yeah, so the term you hear on that is upside down. So if you're upside down on your loan, so if your car is worth $10,000 but you owe $15,000 left on the loan, then the insurance company will only pay the value of the vehicle. So you would be responsible for that additional $5,000 back to the loan company. You'd still be responsible for that.
We'll have to talk about gap insurance next time.
Yeah, gap insurance is a whole nother discussion that we could have. Yes.
Okay. Well, all right. Well, hopefully you don't need these tips about your car being totaled, because that means that you're either lost your vehicle or you're in an accident. But if you do, you can always call our helpline, 1-800-252-3439, and ask questions about your options. We also have a lot of this information online on the website, tdi.texas.gov. Just put in total car into the search engine on the top and you'll find some information. Well, I'm Ben Gonzalez. This is John Mooney, and this is TDI.